Hiren Ved, Director and Chief Investment Officer with Alchemy Capital, joins us. Hiren is all India head, needs no introduction whatsoever. I've always maintained that he's one of the best stock pickers on D Street. Hiren, what a delight to have you back on ET Now. Thank you for joining us. Hiren, I won't get into why we've reached, where we've reached in last 1 month. My question is slightly forward-looking. What is the way forward for Indian markets, and do you think all the pain trade now is in the system?
I think really, according to me, the tight liquidity measures was like a nail on the head of the Indian markets. I think if you look everywhere around the world, central banks are actually easing to revive growth. We have the opposite. We've tightened when growth is falling. So obviously we've had a tremendous negative impact of that, and I think it's also overall in the global context of the fact that most emerging markets where the current account deficit is high are suffering because of currency volatility, and that's hit us too. But my sense is that a large part of the move is really, according to me, the tapering move which started in May, I think is more or less we are reaching there, and that's priced into the market. What going forward will move the markets is, according to me, the day the RBI reverses this tight liquidity stance that they have taken, I think would bring a lot of relief and stabilize the markets, because clearly we can't have a situation where growth is slumping and you have very tight liquidity. Some of it they've reversed by doing the OMO, but I think more needs to be done. So hopefully next month, when the new RBI governor comes in, we will have to wait and watch and see what he does, to kind of reverse this liquidity stance. So I think that could be, according to me, a significant trigger for markets going forward. Having said that, I think that clearly markets are also adjusting to the fact that the 10-11% or double-digit earnings growth that was implied in the valuations might not come through, and you might have probably maybe 5-6% kind of earnings growth. And if the macro context is bad, then if you take 14 times earnings, then you could probably move to more like 4,900, 5,000 on the Nifty. So I'm not saying we may or may not go there, but it's a possibility given the fact that earnings may not pan out the way most people expected it to be.
Hiren, just want to get your views. I mean, even yesterday when the markets recovered, a good 2.5% from the lows of the day, the alarming feature has been the FII sell figure, which is calm, and they've sold out to the tune of about 1,278 crore rupees in the cash markets. This has been larger than what we've seen on bad days when equities have fallen. Yesterday we held out by 2%. Do you think this is just the start of them pulling out and therefore more pain in store for equities?
Yeah, I mean, that could be a risk in the Indian markets, because we haven't seen any significant equity outflows happen from the FIIs. But my sense is that, long-term, FIIs would probably use this as an opportunity rather than exit at these levels. But yeah, I mean, that remains a risk given the fact that emerging markets have underperformed, developed markets are doing exceedingly well, and some money might shift from emerging markets back to the developed markets. So I think that, that risk is something that we will have to live with. So far the outflows have not been very significant, but, we hope that, in fact, at lower levels we start seeing inflows at the current dollar-rupee rate rather than outflows from FIIs.
Is that your approach as well, bottom fish?
No, I think, we